Welcome back to the GMS Podcast, your weekly dive into the world of ship recycling and global market moves.
Brought to you by GMS, the world's largest buyer of ships and offshore assets for recycling. I'm Henning.
And I'm Ingrid, here to bring you this week's market pulse straight from the waterfront.
And if you were hoping for a trading day in ship recycling this week, well, keep hoping. Because right now it's looking more like some other day.
Let's start with the bigger picture before diving into the regional markets.
Global inflation is creeping upward again. Pakistan's on the rise, Turkey and Bangladesh are barely correcting, and India's still waiting for its next update.
The Baltic Dry Index climbed about 7% this week. Capes up just over 3%, Panamaxes close to 1%, and even the smaller ships gained about 0.5%. Nice to see green numbers, but it's not translating into yard action just yet.
Oil slipped another 20 basis points, now hovering just above $60 a barrel. Washington's tightening sanctions on Moscow, even Lukoil is rumored to be near bankruptcy, while buyers in China and India feel the squeeze.
Add collapsing steel prices and volatile currencies, and it's no wonder recyclers are calling 2025 the longest hangover in years. All right, let's head to Bangladesh, where the mood is, well, dim and dour.
Chattogram still wears the crown for pricing, but with zero viable tonnage on the beach, it's feeling pretty hollow.
Local buyers are paying above market rates just to keep plots active and LC limits alive. The taka slid again to 121.93 to the dollar. And those once defiant steel prices finally fell off a cliff. No trading at all this week.
Inflation's hovering around 8.17%. Politics are heating up. And what started as a promising year is now drifting toward a quiet, messy close for the Chattogram choppers.
Now, shifting over to India, where the market seems almost quantum entangled.
Alang's the Schrodinger's cat of ship recycling, somehow both struggling and thriving at the same time.
Steel plate prices dropped again to about $389 per ton. The rupee slid to 88.67 to the dollar, yet deliveries keep rolling in.
2 mini VLCCs arrived this week, one still hovering at outer anchorage, as Alang proves it's still the HKC-compliant go-to, even in a stormy economy.
Low prices, high resilience, classic Alang. Next, let's move west to Pakistan, where the canary in the coal mine has gone silent.
Over in Gadani, offers are now well below $400 per LDT, undercut by cheap Iranian steel.
Domestic steel's frozen around $614 per ton. The rupee slid to 282.5 to the dollar, and inflation doubled to about 6.2%. Not a single HKC-approved yard yet, and no new arrivals this week either.
For now, Pakistan's market feels like a ship becalmed. Sails up, but nowhere to go.
And finally, Turkey. Quiet as ever, or as we like to call it, silent as she stows.
Turkey's doing its best to lure tonnage with slightly firmer prices, but the beaches remain empty.
The lira tumbled nearly 40 basis points to about 42.23 per dollar. And with 2026 on the horizon, even Aliaga's looking out to sea for signs of life. So while the global trade clock keeps ticking, the recycling yards are still waiting for their long-promised trading day.
Maybe next week, maybe next year. For now, it's all quiet on the waterfront.
That's your wrap for week 45. Trading day, some other day.
For the full report and detailed price tables, download the GMS Weekly on the GMS mobile app.
And don't forget to subscribe to GMS Podcasts on Spotify, Apple Podcasts, Amazon Music, and YouTube Music for your weekly ship recycling insights.
Until next time, stay sharp, stay steady, and keep recycling smart.